Hello, friends. How are you guys doing? I hope you're doing well. It's been a while since I posted a video, and today I would like to talk to you about Alphabet, ticker symbol GOOGL. We want to talk about the last performance of the stock in the past 5 years. We probably are going to be looking at some current news, latest earnings report, and then we'll look at the fundamentals. So, welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Google is one of those companies that I own. My hope is in the next couple of weeks, I will be doing some reviews of all the stocks that I own. And then I will be looking for your comments below. Just subscribe and leave me a comment below. Let me know what kind of stocks you would like me to analyze. I'm getting back into making videos, and I hope that you enjoy it. First, I would like to make a disclaimer that I do own Google. I bought it not too long ago. My entry price was $165.74, and it is about close to 10% of my stock portfolio. So I really believe in Google. I think that it's a good price. Once again, like I always say, I am not a financial advisor or a licensed professional. I'm just a YouTuber making videos. So please do your due diligence. But I do want to share what are some of the reasons why I bought it and where it is right now. So if you can see in the last month, it's been kind of flat at 2.4%. Year to date is up 21%. In the last 5 years, it's been up for 157%. Target prices are close to $206, $207, which will be an up, a possible upside of 22%. They just reported earnings on October 29th, so about a month ago. We'll be looking at that. A couple of other things that are interesting. Right now, as of today, it's trading at a PE of somewhere around 22.4 times earnings, and then it's with a forward PE of 19.6. They do pay a dividend of 80 cents a year, which will be somewhere close to 0.47%. The stock in the last month or so have been down almost 8%, 9%, somewhere around there. And partly has to do with the DOJ kind of suing Google, and for they want them to divest of Chrome. They believe that is anti-competitive and because of the antitrust laws here in the United States. However, I agree with Millennial Dividends from this what he writes. I encourage you to read that in Seeking Alpha. But I think that even if they were to sell Chrome or just break up Chrome, Google's still producing a lot of money, and it still will be a good price. Plus, I also believe that with the new administration, Donald Trump taking over, all of those antitrust issues may go away. I just heard in the news also, I think Microsoft just got sued today by the DOJ. I think all of those things are going to go away. On October 29th, we can see that they beat earnings by 27 cents and revenue by almost $2 billion. This is a company that is making a lot of money. The next time that they report on January 30th, and in the last 90 days, they have a EPS revision up 30 of them and 5 down. I think that this is a great company to own and hold for a long time. That's what I want to do with this company. One of the things that I am looking for is just to hold a lot of these companies and make sure that there's some of these companies that I buy as a trade, but most of these ones I am holding more as a long term, and Google is one of them. As you can see, the revenue has grown about 18% in the last 5 years, and same thing with the 5 years and the 10 years. So that is a very consistent growth of revenue. The gross profit is 55% average of the last 5 years. That is amazing. When it comes to earnings, as you can see, even though it goes a little bit up and down, it's been going up in a really nice line. In the last 10 years, it has grown 22%. In the last 5 years, 25%. So it has accelerated. And they have in the profit margins average of about 22%. Free cash flow, it's a little bit more up and down, but generally speaking, they continue to grow. In the last 5 years, only 15%, which is great. But if you notice, since 2021, it's being a little flat, if not going down, just maintaining a little bit flat there. Book value continues to grow at 11%, about 12% a year. The average of the return of equity is 23%, which is a great number. Return on asset is 13%, which is awesome. And return on invested capital at almost 17%. That is also great. Dividend, they just started paying dividend this year, so there's not too much track record. So when it comes to debt has grown, but compared with the free cash flow that they make, they're very secure with the long-term debt. What I normally do is I take the long-term debt, the current long-term debt, and I divide it by the average free cash flow. And with the average free cash flow, they could easily pay their long-term debt in less than a year. So if you see, they produce $4.46 per share of free cash flow, and their long-term debt is about $2. So they definitely could pay that in less than in 6 months. Shares were going up all the way up to 2019, and since then they have been paying up pretty fast at about a 2% a year, which is great. So let's try to find some prices, some fair prices, okay? And once again, I just want to disclose that I am not a financial advisor, and this is just my opinion. Something that I also would like to share with you is that a lot of my math, a lot of my calculations assume a desired rate of return of 15%. So most YouTubers use 10% or 9%. I use 15%. The only one, I'll tell you which ones are not discounted. So this one, historical multiple valuations, are not discounted. All I'm doing is I'm taking the trailing 12 months or the average of 4 to 5 different values, revenue per share, earnings per share, free cash flows per share, and book value per share, and sometimes dividends if they have a long, at least 5 years of paying a dividend. And I use a 5-year average of the multiples, and I just come up with these numbers. And with the growth that Google has, I normally try to focus more on the trading 12 months because the average is going to be way too low. So if we put all the numbers together, a fair value based on multiple historical valuations is about $151. When it comes to revenue-based valuation, we see them, the average in the last 5 years, they have been growing about a 16% revenue. So in the next 5 years, if they continue to do the same, if they continue to maintain the same profit margin, they continue to buy the same average of shares back with a regular P of 25, at 15% discounted, fair value today will be $175. When it comes to discounted earning valuation, that is just we grow the valuation at the EPS at 20% and then discount it at 15%. We have a fair value of $234. We do the same thing with not the same thing, but with the payback time. We assume that we continue to grow at 20% the free cash flow, and we add all of that money that we are receiving, and it gives us an average fair value of $185. When it comes to a discounted free cash flow valuation, discounted at 15%, we see that or trailing 12 months, using the trailing 12 months numbers, fair value is of $182. We're not going to be using Warren Buffett's owner's earnings valuation because with tech, it's not the best thing to use. When we put everything together, we see that there is a fair value without a margin of safety of something around $186. If you want to be a little more going into the average between the 5-year average and the trailing 12 months, it will be $170 as a fair value. However, I used the trailing 12 months. I like to give margin of safety depending upon the company. I think Google is a really good company, so I add an additional 15%. So trailing 12 months will be somewhere around fair value of $157. Like I said, I bought it. The average comes down to $165. I paid a little extra. I think I discounted only 10%. Somewhere around there, because I really wanted to have Google. So that's what my analysis show me, and this is why I bought Google. So I don't know what you guys think. Please leave your information down. Make sure that you subscribe, leave a like, give me your opinion, and also I will highly love for you to put down some possible companies that you would like me to evaluate. I hope that you have a great one. Talk to you later. Bye.